Hi, my name is Darren Joseph from HTJ.tax, and we're the team that seeks to demystify that sometimes confusing world of international tax. And today we have the honor and privilege of having another conversation with Leonardo. Leonardo, could you please introduce yourself?
Yes, Darren, thank you very much for having me. I'd like to start by saying hello to everyone that is watching. My name is Leonardo Marques Sanchez. Just call me Leo, it's easier. I'm a tax lawyer, a tax partner in a law firm in Portugal, also a tax law professor at the Portuguese Catholic University. My main areas of focus at this point are national, domestic and international issues pertaining to individuals. So I think that's a little bit of what we are going to discuss today, right?
All right, fantastic. I guess following on from the previous topic of triggering tax residency in Portugal, what about owning a home? I mean, real estate investment in Portugal is very controversial but popular, and it's a great option. There's some great deals to be had. By just owning a home, is there any risk for me of triggering, or so anyone who's not regularly resident in Portugal, of triggering tax residence in Portugal?
Right, good question. To live is risky, so it is a house in Portugal. But when we look at the residency criteria, either you're staying in Portugal for more than 183 days,
Yep.
or you have a primary home in Portugal. So provided you have a house in Portugal, but it's not your primary house, according
Right.
to the law, you are not deemed resident for tax purposes here. So the key issue is to make sure, if for any reason you're asked by the tax authorities to demonstrate that you are not a resident here in the context of an audit or whatever, you are able to do that. So, but if there is no funny business there, if you have your house really leased to someone else, there will be documents and evidence and testimonies that will help you demonstrate that you're not resident here. Also, what is very helpful from a Portuguese standpoint, if you're in a position where you have to demonstrate that this is not your habitual residence, well, maybe you can get a tax residency certificate from your country of residence saying, well, I reside here. That is always helpful. There are a lot of evidence that we can use. So the answer clearly to your question is no. Simply by owning a house in Portugal, I do not create a taxable residency here. One thing is, when you buy a house in Portugal, you have to pay real estate transfer tax. And the tax rates are different if you're allocating that property to your primary residence or to a secondary house. And they're lower, in fact, if you use the house as your primary house. So, I mean, sometimes there is advice to say, well, why don't you mention in the deed that it will be your primary house, and why don't you assess the real estate transfer tax based on that? Because you will pay less taxes. That is true, but then there are ramifications to that option that sometimes creates additional issues with the tax authorities. And if there is such an assessment, then yes, there will be a risk. But if you do everything by the book, it's very funny. You're a tax lawyer yourself, so you know how it goes. Sometimes we make a decision or even an honest mistake, and there is a ripple effect to your personal income tax, and you increase your tax bill.
Yeah. Okay, that is a good point. And I guess to me, the takeaway is just be honest, be thoughtful, get advice, and be 100% honest, because shortcuts tend to come back to bite us at some
Yes.
future point in time. Okay,
Yeah.
thank you. Leo, if people wanted to get in touch with you, to hire yourself, to hire your team, what's the best way to find you?
I think I can be easily found on Google. So just Google my name, Leonardo Marques Sanchez, and I think the law firm, Miranda's law firm website will immediately pop up with my email addresses. That will be easier. I'm easy to find.
All right, fantastic. Thank you.